I find it really interesting and a little bit crazy because, as you know, times have really changed quite a bit since, gosh, a year or 2 years ago. Right now, as some of you may not know, that the jumbo loan rate to actually get a loan through a jumbo package is actually lower than a conventional rate, and that just kind of flipped relatively recently. It's always been in the inverse, at least for most of the time that I've been doing real estate. But I just wanted to talk to you a little bit about that and kind of share with you why this is happening. Jumbo loans are not backed by the federal government, and it's all the risk is going on the bank that's actually going to be issuing that loan. Conventional loans are actually traded on the open market, and they're more concerned about the short-term effects of their saleability than a jumbo loan. This is part of the factor of what's causing that inverse relationship with jumbo and conventional. As an example, if they take out a loan, if somebody takes out a loan for, like, say, 5% right now, and in 3 months it's 6%, and knowing that these mortgages get traded on the open market, it would make that 5% loan a lot less valuable because they're not going to be making as much money. It's going to be a little bit harder to sell, so they have to kind of jack up the rates to kind of compensate for that. Jumbo loans are actually held by the bank, and they're not traded, like I just mentioned, on the open market. So when the banks issue these jumbo loans, they look at the current rate that would work for them, and then regardless of where the market goes, because they're not trying to sell it, if they can be happy with the return they're going to get, they're going to go ahead and issue you that loan as long as you qualify. And again, they're going to make a good return, and they're going to be pretty happy with that. Something also interesting about this is that Fannie Mae and Freddie Mac, they actually have like a tax that's kind of built in to their program. So instantly those rates will get a little bit higher, whereas in the jumbo loans, they don't have that. So it's kind of cool. As an example, let's say you're going to a gas station. we almost all have cars, right? And there's always a tax that's kind of built into that, and as those taxes go up for whatever reason, it's going to impact the overall price that we're paying for our gasoline. Right now, I live in the Wellesley, Natick, Needham kind of pocket, Weston, and the threshold to the minimum amount of money you need to take out on that particular loan is about $828,000, and there are some other so there are several mortgage brokers that can possibly do it for around $750,000 to $800,000. So it all depends on when you're actually trying to take out the loan and everything that kind of comes along with that. I would refer you to your mortgage specialist, and of course, if you need a couple of recommendations, I've got some excellent people for you to talk to. So if that makes sense, hopefully it does. There's just less costs with a jumbo loan, and it's not being traded on the open market. So those banks that actually issue these jumbo loans, they are typically happy with what they can get. Again, not being concerned about turning around and selling it again on the open market. So they're able to give you more favorable rates, which is actually pretty incredible. Again, this market that I work in, a lot of people get jumbos. So again, let me know if you have any questions or what you think about jumbo rates. Hey, I'd like to hear from you regarding jumbo loans. What you're thinking about, if you just recently experienced something, or if you're seeing something different than what I'm seeing out there. Just leave me a message below, and please give me a thumbs up if you like this video.